Good evening and welcome to the Australian Stock Market Show. Is the All Ords preparing to reach 8,500 points in September? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at world currencies, and for our main topic in tonight's show, we get into the top 5 tips to save money on broker accounts. First up, we share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the most important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Appen, South 32, Xero, the major world currencies and more. So get comfortable as we'll get into those soon. I'm Philip Tortevsky, your host for tonight, and joining me are two of our highly experienced analysts and professional traders, Janine Cox and Pedro Banales. And together we're Australia's most trusted stock market educators. Good evening, guys.
Good evening, how are you?
Good, how are you?
Good, thanks. You fired out there. It's a great start, isn't it?
Yeah, we've had a nice
and
dinner.
We've got so much to talk about tonight.
We do. The market's roaring high. Pedro, how are you?
Third night without Dale. We're still here, so we're doing pretty good. We miss him.
Well, let's not speak too soon, right? Let's get to the end of this. But anyway, tonight, as mentioned, we get into the major world currencies. But first, let's take a look at this week's hot stock tip. Pedro, what have you got for us tonight, mate?
All right. Well, the hot stock for tonight is Bigger Cheese Limited, ticker code BGA. So let's get straight into it. So on your screen right now is market index. Bigger Cheese doesn't really need much of an introduction. Most of you probably have it in your pantry. Dividend yield.
Pantry? I don't know. I keep mine in my fridge.
Do you? Well, yeah. It depends how much you want to keep it for. So,
not eating at your place, mate.
Dividend yield 1.63. Let's focus on the chart, guys, and on the stock. I just wanted to point out that Bigger Cheese doesn't only do cheese. It actually has a portfolio including Vegemite, Dairy Farmers, Farmers Union, Masters, Daily Juice, and Super Duper. Do you guys remember Super Dupers? They were pretty nice.
Is that the ice cream?
That's yeah, it is. Yeah, the ice cream. Yeah,
okay,
very nice.
Great.
All right, so let's get straight. Let's get into the chart now, shall we? All right, so on your screen right now is the monthly chart on the left and the weekly chart on the right. And look at that. The stock has had a major fall. It listed back in 2017, and it did drop for quite a while into that 2020
when
low.
Did it list?
2017.
Oh, I think I can go back a bit.
Oh, yeah, maybe a little bit earlier than that. So actually, let's expand it out. That might actually help us a little bit. So if we stick to the monthly chart, it has had that huge fall since 2018, had a bit of a topping there, and it's found, looks like it's found some nice support over in 2023. Now, if we go to the weekly chart, let's expand out the weekly chart. We can see a nice little pattern forming here and a bit of accumulation around that $4 to that $4.50 mark. So right now it is trading down a little bit. Looks like it might trade down to that $4 mark and possibly find some support, seeing as we had those nice resistance levels back in 2023. So if we do have a breakout of that $4.50, we could be looking at a 46% upside.
Look, it's a lot of resistance, isn't it, to get through? I mean, we've had one peak here, 2, 3, 4, the fifth one about to be confirmed potentially now. I mean, that's a really good yardstick, this low here at 408, because if it takes off strongly through that, then we could see a bit more of a sort of a stabilisation or correction back down to these sort of levels, which, personally I'd rather see. But you're right, if it does take off above this high here, particularly this one it's just made recently in August, then it's off for a good start, and we could see this trend continue, and ideally that'd be nice. But the third option is it could just keep tracking sideways. But exactly. I think the beauty of what you've identified in this pattern here is that it makes it so easy to make a decision, and that's what some people don't think about. They're sort of saying, well, is it a buy now? Well, no, hang on. If it goes this way, then it looks good. If it falls below this low, then you just, you stay out of it. If it goes sideways, you still just get ready for the green light.
Exactly.
All right, fantastic advice. Thank you very much. Now, that is it for our weekly hot stock tip. Shortly, we'll get into our topic for the night, but before we do, Right now, it is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 9290 9988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a free copy of Dale's book, Accelerate Your Wealth. So pick up your phone right now and dial 03 9290 9988. Now, while you do that, we'll give you our thoughts on the major world currencies. So let's get into it.
On your screen right now is a watch list of the major world currencies. Now you can see at the top of the list there, we've got the British pound, US dollar, which is interesting, isn't it? Up 3.6%, that's looking nice. Euro dollar, the US dollar, is actually up 1%. Now all of these currencies, so at times they stabilise and at other times we see some significant movements in them. Aussie dollar versus the US dollar is actually down 0.55%, and I was expecting it to come down further actually than what it did in recent times. I'd ideally like to see it come back again to about 65 cents, but we may not have that happen. It just depends on what unfolds over the next few weeks. Swiss franc versus the US dollar is actually down 0.66%. Now I want to come down now to the New Zealand dollar, which is actually down 1.87% versus the US dollar. Now, Japanese yen, we've seen huge sell-off in the Japanese market, and the Japanese currency is actually down 2.55%.
But it's still going.
Yeah, but it's not the end of the world really at this point, given the volatility we've seen. But at the moment, we could be seeing potentially some stabilisation, hopefully, in the Japanese currency. What I wanted to talk tonight about, Phil, was what's happening in Zimbabwe, and we've seen this year they've established a currency, gold-backed currency. Well, it's actually not just backed against gold, but to stabilise Zimbabwe's currency. So it's sort of a breakaway from the US dollar, and I know that they've been wanting to do this for some time, but there's a whole lot of turmoil, I guess, at the moment, which I feel so sad for the people and what they've been through with massive inflation and all sorts of problems. And now, typically what they do is they actually might get paid in their own currency, but then they transfer or have transacted that into US dollars, I guess for some security in the past. But now that's actually seen like the black market over there, and people are actually going to jail for actually transacting in the currency. They have to transact in their own currency, it seems.
Well, it's very interesting because we were speaking about this off air. This is a first in a long time that a currency is going back to, somewhat gold backed for a very, very long time, given we are in that fiat system right now. So, did you want to bring up the chart of Zimbabwe, or was it more just a conversation
It was more
around?
just a discussion that was, I wanted to have about this and how is this an experiment? That's what I was wondering. Like, why have they been allowed, to do this? It's interesting, isn't it? Because there's so much control from other countries.
Well, there is, and other countries hyphen USA, right? Because we know, oil generally is denoted in US dollars, and we've seen other countries try to move away from that scenario being backed in US dollars, and it ended in conflict. Let's be honest. But look, did you want to say anything more on?
Look, I think we should just continue to watch this space, and we'll update you on how all of that's going down the track and what potential changes might come about from that.
All right, great. Well, that is it for our thoughts on the major world currencies. Now, before we get into the first email, remember to get your questions answered live on air, you'll need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now let's get into our first question. Our first email is from Peter, who is asking about Ramsay Healthcare. The stock is currently in a downtrend. However, last week's price action could indicate a change in control from sellers to buyers. Now, I'm not currently in the stock, but looking for an entry. All right, Pedro, what do you think?
All right, so let's get straight into the chart and have a look, Peter. So thanks for that. All right, look, it's going down. That would be my first initial thought. Let's just get straight into the weekly chart.
Well, can I ask you just quickly, because his main question was it's moving from sellers to buyers. From what you're seeing on that chart, is that evident?
No, it's not actually. So you can actually see, if we zoom into the weekly, these movements here, have a look at, this is a close, that little dash there that you see, it's actually closing very low from the start of the week. So if it does maintain that level, or if it even trades back down, that's a sign of the sellers.
I mean, it's been doing it before, hasn't it? So we've seen instances where the price has risen and it's fallen away. It's risen, fallen away. There's nothing at this point to tell us that it's actually changed hands yet. 2 weeks up does not make a change in trend.
A sheep
All right.
station.
So let me ask you this then: if it's not ready, what are the things that you do want to see for this one to confirm? Perhaps the things he's saying that it is moving from sellers to buyers. Anything in particular?
Yeah. Look, obviously trend lines are really great for working out whether the trend has changed and it's actually this handshake's occurred. The other thing is just to see a number of weeks up. We've only seen 2 weeks up. The good thing, like Pedro said about this week's bar being down, is it actually is it's sort of testing this low, and you really want to see a test of a low before it moves up. Like here we saw a test of the low, but obviously there wasn't enough in there to confirm that it was going to continue to rise, because the rise was short-lived and it was sold off again. So volume's looking reasonably good. It's looking fairly consistent, which is a positive sign. I'd now just like to see a little bit more strength to the volume as it actually starts to take off, if it rises above that short-term high there in August.
Well, great. All right. Well, there you have it. Some fantastic analysis there for you, Peter. We now have a caller on the line. Welcome to the Australian Stock Market Show. Who have we got on the line?
Okay, this is Carl here.
Thanks for calling in, Carl. What's your question for us today?
I'm about an intermediate trader. I love watching your show, and I was just wondering what ideas you've got on making money in a bear market. Is it selling options or shorting stocks, or what do you think would be the best way of doing it, the Australian
All right.
market?
Excellent. That's a great question. Thank you very much for your call, Carl. I'll put this one through to you, Pedro. It's a great question.
It is
because
great, yeah.
a lot of traders out there, they look at the market or from one direction. It's from the buy side and going long only. But as we know, there's money to be made on the way down as well. Janine, I'll get your thoughts on this after Pedro, because I know you've got views.
Definitely. There's so much to unpack here. So great question, Carl. I would say that just because there's a bear market, so if we look at the stock market, ASX as a whole, it doesn't mean that all stocks are going to be going down. So my first advice would be that to look at the individual stocks within that market, because they're the ones that are going to get those opportunities for you guys. So if you're more of an experienced trader, then you could start to get into the shorting. But I would say really just focus on the individual stocks rather than the whole market in itself.
But I mean, in terms of shorting, because he's asking specifically, now we don't know if Carl is an experienced trader. He said he's an intermediate trader. And in terms of the options he said there was options, but then there's also, you can short through things like CFDs, derivatives. Any
Bear
thoughts?
market ETFs are another opportunity.
Absolutely.
Options, obviously there's a whole different layer of knowledge that's required for options. CFDs for short selling. To me, I found that CFDs are far simpler in understanding what you can do in the market. It's just leverage after all, but you can trade both ways. Whereas options have that whole other layer of knowledge that you need over the top of it. There are simple option strategies, so it's worth knowing some of those. And I think you've got to just try things. Sometimes it's in the marketplace. You can read all you like online, but until you actually put it into practice and try something that you've actually learnt how to use, then you'll know the answer. It's not like there's one thing that's suited to others. I know some people love options, and they'll get up at night and go and trade the US market options, and I've done that myself before. Crazy people like me. Or you could then go and decide, look, CFDs are far easier, and I can trade those during the day, and I can get really good stocks to trade. It's really up to the individual, isn't it?
Oh, I love what you're saying, and you're so right. I mean, at the end of the day, CFDs to me anyway are the simplest form. It's almost in reverse of trading, where you're pushing the buy button. Normally you're pushing the sell, and the process is very similar. And we do have some very good brokers out there that do have direct access to the market going short. So we are going to get into that shortly, but we do have another email from another Peter who writes, I'm holding South 32 for the long term. And do you see a double bottom on the weekly chart? Now, Pedro.
All right, double bottom. I like the slang. I like the language, the lingo. All right, so let's get straight into the chart. Weekly chart, let's expand that out. So you did mention the double bottom over here. We'd have to see, it does look like it is forming somewhat of a double bottom, but really, how far away are these troughs? I mean, we've got 2024.
People can be really tricked into the whole theory, and like I think it's really important before looking at the detail, though. What do we look for? The thing to look for is the big picture. So, you know, traders are often confused by this, and to be completely respectful of our students who are out there watching, I'm not going to go into detail about how that's determined because it actually takes quite a while to get this, and you've got to look at lots of different stocks to fully understand this, because there's a big difference between identifying these like topping or bottoming patterns that are real topping and bottoming patterns, and ones that are just short-term support or resistance. So if we come back to the chart, I'll just help you out a bit further with this. Pedro, now we've got this here. This could be a continuation of the downtrend, couldn't it?
It could. And definitely by seeing how far away these troughs are, so if we can zoom in, this is only formed earlier this year, so February 2024, and this latest one is just in August. So they're not far apart enough for me to really determine that as a double bottom. I can see where he's coming from, and sometimes you do see finding, like you said, finding support at those levels. It just could be a previous support level.
But I was going to mention that, you know, regardless of whether this, we use the term double bottom on top of it, at the end of the day, it looks like the stock is, bouncing at a previous level. Just that alone, looking at that chart, does that, I guess, bode well for the stock, or are you looking at it because there is a nice little, it's fallen quite a bit from that level. Is this something you're looking for in terms of support, or is it just temporary before it continues on lower?
Look, I think the gap is sort of telling us something, that the price is likely to rise up there, and you don't want to fall in love with something and think, oh good, this is an opportunity, I can make some money out of this, because it could no sooner come up, fill the gap, and then it's trading back down and that takes out this low. So the idea is to think of this, and I'm just going to expand it up so that you don't have to get your magnifying glasses out there. But yeah, what we've got to wait for is a rise up to fill the gap, see what it does after that, a test again. So generally stocks will rise up. It might go up 4 or 5 weeks. Have a look at what it's done in the past before it actually pulls back to test support. And then it's still got to jump hurdles and prove that it's going to continue up. So I think this stock, it's way too early to be concluding anything like that at this point.
Yeah, some great advice there. All right, next we have an email from Nick who writes, "Hi Janine, I know how much, you love a gap on the charts. Now you often refer to gaps being filled. So what is the reason gaps get filled on a chart?" Now it was only mentioned you, Janine, so it's best that we push this one over to you.
Thank you very much for that, Nick. That's awesome. Just thinking about this, there are 2 dimensions or 3 dimensions to this, but I can only mention what I can about this particular area, and that without spinning people's heads. And that is that obviously sometimes you get this exuberance in the buying side, and the buyers suck up all of the trades as the price goes up and it's filled, and then eventually the buying runs out and it falls over, and the stock comes back to fill those gaps. As it settles down, it takes off again. Now, the thing is, with the AI that's going on, that will actually, I think, exacerbate it even further in terms of the filling of gaps. But gaps have always been filled. This is nothing new. It's something that goes back in time. But not every gap gets filled. It's not a black and white thing that, you're going to see every single gap get filled. And some stocks trade on overseas markets as well as the local markets. So they're going to gap all over the place, and in those particular stocks, there is a high probability that a lot of gaps won't get filled.
And to me, this question speaks to why would it be important? It really would be important if you're looking for a strategy around this kind of price action. Apart from that, why it's happening, it doesn't really make too much impact to what you're trying to do, because at the end of the day, you're looking to take advantage of that gap if that's what you're trying to do. But some great words there by Janine, and thank you very much, Janine and Pedro, for that. Now, let's switch gears and discuss the wonderful world of brokers. Selecting the right broker can impact the success of a trader greatly. But with so many choices out there, how do you select the best one? And more specifically, the best one for you? So I want to start things off by showing you this image highlighting the 4 main things you need to consider when choosing the right broker. Now, the 4 points are commission, spread, regulation, and segregated accounts, meaning where your money is being held. So let's start off with the commission and spread, because you constantly see ads like no commission, no spread, but it's not all just about cheap fees, is it, Janine?
No, it's not. It's a minefield out there. So just, be aware of that, especially when you go into leveraged markets. But can I first say that, if you're focused on the cost, that's probably not the end that you want to be looking at most. It's more about making sure that you can trade whatever it is you're trading well. And, the cost is sort of, to me, is secondary to the whole thing. But then it's really important to sort of also consider the spread side of it if you're looking at the leveraged markets. And, they say no commissions, but then they'll get you in the spreads. So you've just really got to be aware of how these markets work, as in whether they're leveraged markets. When you're looking at ordinary stocks, people, they complain about paying $20 or $30 for brokerage. I think, you're just really barking up the wrong tree. If that's what you're looking at, you really need more knowledge. That's my view on it.
Oh, look, I totally agree. But what about if you're looking to trade a certain way, let's say short term? I mean, would you take note of it then, Pedro?
Yeah, I'd say that if you're trading it more short term, yes, the commission and the brokerage is going to be more relevant because you're going to be in and out more time. So more trades equals more money on brokerage, basically.
Yeah, especially if you're trying to clip just such a small amount in terms of margin. They all count at the end of the day. Now, whilst the low costs are great, regulation to me is one of, if not the most important thing when choosing the right broker. So I want to ask you on this one, Janine, do you agree?
Well, look, there's a whole lot of things to consider here, isn't there? You want a market that's transparent, ideally, and you want to believe that everything's regulated and that they're doing the right thing by their clients. But is that really happening in every market? Well, I'm sure you out there have got plenty of stories of your own to tell about what's happened in your trading, but some things that I remember are, from even students telling us when the CFDs first started, I can remember students telling me, I went to put my trade on, and even though the price was physically traded in the market, I didn't get filled at that price, and I didn't understand it, and I complained about it. But a lot of the problem is that people don't understand that if they're trading an over-the-counter market or a market maker, or they're trading direct market access. So I think since then a lot of people have wised up to the whole thing, and it's a bit more on the table, if you like.
Well, that's why it's so important to me, because the regulation, that in itself will eliminate all those, will give you clean, transparent pricing, transparent costs, and all those things that you really do need to consider, because, at the end of the day, if you are seeing what Janine just said, then it's a whole nother layer of information or work that really you can really avoid. Now, anyway, there is one more point that is extremely important when looking for a good broker, and that is where your funds are held. Now, do you want to explain this one, Pedro?
Yeah, sure. So you want to find brokers that keep your funds in a segregated account. So this is basically an account that they can't touch. So they're not using your money to do their own thing. So that's very important because, liquidity. If something happens to the company and they've used up all your funds, well, how are you going to get your money back? So.
Well, there was that example 10 years ago. I remember being involved in that MF Global when they went under, and the money was in a segregated account, and clients got their money back in dribs and drabs over time. But just being in that structure there saved us. Yeah. All right. Well, now we've covered what to look for, what new traders will come across next is brokers offering leveraged accounts, which provides a choice in terms of the type of broker model. Now, here's this from Independent Investor, which outlines the two types of brokers when dealing with leveraged products. Now, Janine, can you explain the difference between the two?
Yes. Now, direct market and a market maker. So the issue here is you've got direct market access brokers, which enable 100% transparency in the pricing and trading, and that's what we all want. And the trades are placed in the real life market directly. Now, market makers are the market as far as the trader's concerned, and being the counterparty to their trade. They also use their own pricing as a basis for buying and selling contracts, as opposed to placing orders in the real life market.
So the market maker model involves, the broker taking the other side of the trade, which is very interesting to me. Now, Pedro, do you want to explain what is happening here and why this could be a concern?
Yeah, definitely. So this is probably counterintuitive to what most people think is happening when they're buying a share, right? So usually you buy a share and somebody's on the other side selling it, right? Well, with a market maker, the platform itself is creating the market. So you're buying it from there. They're taking the other side of the trade.
Broker.
The broker is. So you're buying the underlying asset or the CFD, and they are taking the other side. So if you actually make a profit, they're actually making a loss. So it's not going to be in their best interest to do that, right?
Yeah, spot on. Now, for those new to brokers, what you'll often find on many platforms is that there are stocks being recommended by the broker. Now, the question is whether you should take note of these recommendations. I know, Janine, you got something to say about this one.
Yeah, well, look, I mean, the thing is, you've really got to do your own analysis and be your own person, really. And the thing is that the analysis and understanding it actually is what gives you your power and strength in the marketplace and allows you to protect yourself. So if you actually rely on a broker's recommendations, and I've had loads of experience with this in the very early days, often you can be sold a lemon. Now, I'm not going to say that every broker's the same, because they're not. It'd be wrong to generalise like that. There are some really good brokers out there who genuinely will look after your interests, but that's the thing. Do you want to be the person receiving the fish, or do you want to be the fisherman or fisherwoman? That's really up to you. And personally, I'd much rather be that fisherwoman.
Oh, every day of the week. To add to your point anyway, Janine, here's this from Market Index. When reviewed individually, many analysts and brokers have difficulty beating the market average. Now, to me, the best traders do their own research and rely on no one when trading. So with that said, let's now look at some recent broker recommendations from the Market Index website and see if we agree. Pedro, go for it, mate.
All right.
This is going to be fun, isn't
This
it?
is a good one. Yeah, get ready for this. All right, so let's get onto the charts. All right, so we have the broker consensus here on the top left. So this is a strong buy from it's an average of brokers, right, from Market Index. Now, this is where it's currently trading at. It's 43 cents. This is the 12-month forecasted average at $2. Let's expand that out. So in 12 months, the average is saying that it's going to reach that $2 mark. Now, I don't know about you guys. I do believe in...
That's very ballsy is all I can say.
I believe in a lot of things, but I'm not sure about this one.
But I mean, is it completely out of the ordinary, or is there a chance?
Well, let's see.
Because the reason why I ask this is because these broker recommendations, they are predominantly based on fundamentals, which they provide valuations, and I know this one looks a bit lofty, but just go to the chart and give us your thoughts.
Yeah, I reckon so. Actually, let's have a look at this low here in 2020. It did take what was it? Maybe 5, 6 months, 7 months to reach up to that high in 2020. So look, it is possible. But that was coming out of the COVID low. A lot of stocks did this. It was, a lot of a very powerful move out of there. It's come back to those levels. Now we've just got some basic support and resistance level. It's below that resistance level, so now it has that hurdle to get past. I reckon that it's more of a chance that it's going to go down and test this low, or just bounce around here and hit its head a couple of times.
Yeah, I'd agree with you. I guess I'd just be wanting to have a quick look at what's happened in the past, like outside of COVID. There's 250 here and down here. Could it do it again? So, and COVID, how much was that? I wonder, just out of interest. It's right off the charts, isn't it? So will it repeat that? I agree with you. That's probably very unlikely, but could it get to this level? Yeah, that's more realistic, isn't it? I'd say. But look, until it starts to make any sort of move up, I don't see how they can make that sort of prediction at this point, not for 12 months.
So we're saying for the first one, for the broker...
Do they know something that everybody else doesn't?
I mean, look, they're lofty gains or projections, but we do have more stocks. So Pedro, another one?
All right, let's get into the next one. Next up, we have PMT. So this is Patriot Battery Metals. bit of a tongueful. It IPO'd, now this one I'm sure it IPO'd back in, 2022. And it, not like other ones, other stocks, it did actually trade up, and then now it's traded all the way down and it's falling. It's actually going down. So another one that is a strong buy from the brokers. I think that it's going to hit its head at that 70 cent mark before anything. I don't see it.
I guess what strikes me, Pedro, is interesting on this is the fact that these are stocks that are still falling. They haven't even really made any sort of, a couple of weeks up on this one. It's not really telling you anything. They haven't made any sort of concrete turnaround. The volume's really not looking great at this point yet. There's no indication that it's going to go up. And like you say, Phil, they're basing it all on the fundamentals.
Mm-hmm.
Now, it could end up moving up, but so what if that's what their recommendation is? I'd want to see more concrete, because I guess from my experience in the beginning with brokers, I found that that they were ringing us, telling us, oh, you've got to buy these stocks. And to me, it looks like a similar sort of thing. I don't know what the detail is in terms of how many brokers are in on this, but, is it a case that there's a lot of brokers that are holding the stock and they're trying to dump it and get rid of it? And they all got stuck in that, uplift from some of what was going on with these shares at the time.
Yeah, and if you're new to the market and you're, playing around on your platform and you're looking at this kind of stuff, you'd watch it and you think, okay, they seem like it's a professional view, and we do know that it is fundamental, not technical, but you can see really the difference in the way a technician looks at a stock versus a fundamentalist. And really at the end of the day, to me, it comes down to where you buy and when you sell. You can sit down with somebody and talk till the cows come home about
show me the money,
about what a stock may be. And
where's the proof?
Yeah, and I always find this with fundamentalists. So we sit down, and I do know a few. We sit down and they give me the spiel, and I just say, okay, so when are you going to buy? Just tell me when you're going to buy. That's all I want to know.
When you're going to sell.
And when
the fundamentals go down, what rules around that as well.
So is that after a few drinks, or is that,
Oh, yeah, we're well on the way, but that's a topic for another day. Do we have another stock?
All right, let's get on to the next one. So next up we have Syra Resources. Now this one looks like, I'll just expand out the monthly. It looks like it's heading back down to that 15 cent level. So we're getting pretty liquid here. The forecast is 70 cents, so 69 cents. Possible, yes. Likely, what do you think?
Look, it's not out of the question, but look, let's just go and have a look at, I think we need to use the weekly chart as an example. Putting see if we can get a trend line down there from the top. I'll just take it from this point. I can't really get anything in there that's going to help us. I'd have to go right back up there, but until it actually crossed a trend line or made some sort of a pattern move at the bottom there to give us something a bit more concrete, you can't draw any conclusion from this at all. In fact, I'd go so far as to say that I wouldn't even look at it sideways until it had gone through that.
Definitely.
And you know me, it's not $1. See you later.
But it's an interesting point you just said, because these two stocks, or the last two we've looked at, they're stocks that are in free fall, right? And so, we're looking at the weekly chart there, but from your experience as a trader, and I'll ask you first, when you're looking at stocks, and let's say that the projection that they've got in place is a potential, right? What are you looking to see? Because I know a lot of traders go in and they drop down to they zoom in looking for that reversal as early as possible, which is fraught with danger. But from your experience, is it a case of zooming out when you're trying to find these really significant lows, or what specifically are you trying to look for?
All right, so we're looking at the chart, and one thing that I noticed, and I've had this thinking, long time ago as well, is that you see it fall and you get excited and you want to buy in, and then you say, all right, if it falls more, I'll just buy more, and I'll just buy more, keep buying more until it starts going up, and I'll dollar cost average, and that's crazy. That is crazy, and I know a lot of people do think like that. So what we want to see is confirmation on the chart. You see all these red bars. Let's just zoom in there. We're in the weekly chart.
Why aren't these brokers buying it? If they were buying it, do you think the stock price is going to be sitting there
exactly.
like
that? There's no volume here. There's no volume indicating that at all. You do see this bar is starting to turn, but we need more confirmation. So to answer Phil's question, I would be looking for it to find a little bit of resistance around that 43 cent mark. Maybe trade down a little bit and then break above it strongly. So you want to pass those hurdles first.
And potentially even go looking longer term, maybe go to a monthly chart and look for that big reversal to give you that real confirmation. But I know we've got more stocks because
Always.
we're really showing off the brokers today. Sorry, guys.
Yeah, we know that some of them are really good out there, but
Yep.
look, okay, so we're looking at this level here, 50 cents, okay, this really strong level that you've marked on
So
the
this
chart.
one is IMU-TEP,
Yep.
is it?
Okay, do you like this chart? It's a bit crazy, isn't it?
It's a bit of a trader's
Look at it.
stock. It is
Just to
pretty
look at the
crazy.
history of it. I mean, it's spent so much time going sideways. We're talking about 10 years of doing nothing. Now, eventually it might do something, and there could be people holding it long term hoping it is, but it looks like it may have found support around this level here at about 23 cents. That's
Yes.
something. You know, if you're clutching for the straws, you've potentially got something, but I'd stop celebrating if it takes out this low. That's a low of a couple of weeks ago, which is 28 cents. So if it goes below that, it's all over. If it starts heading up further and it gets above 44 cents, then I think it's got a chance of
I do like
taking off again.
I do like that the bars are starting to change. So the size of the bars, and it actually coincides with a little bit of a higher volume here. Although this highest volume there
Was the sell-off?
was the
Someone
sell-off.
dumping it.
Somebody's dumping it, exactly. So are these brokers, like, you know, not putting my tinfoil hat on, are they kind of suggesting them and then selling into it?
But I mean, given the volatility of a stock like this, you know, you're looking at it, it's very, very volatile. So that 12-month projection, from all the ones you've shown to me, this one really could do it within a month or two, the way it moves. But again, speaking to that, I guess volatility is also, you got to ask the question about the liquidity, because it doesn't
Exactly,
look
and
too
the risk.
liquid, and the risk.
Exactly.
Do we have any more?
You know we do. All right, so next we have Chalice Mining. So Chalice Mining, this one is one that I don't mind actually. And I'll explain why. So let's expand out the chart. This has a buy, not a strong buy from the brokers. It does seem to have found some support from that February low, although it does seem to be forming a similar pattern to S32, if you remember earlier. It's closing near the high, and I think that it's reasonable to have a forecast of $2.35.
So let's I'll play Nostradamus here. If you're looking, you know, in your crystal ball, you're looking at the the right-hand side of the chart, the white space.
Yep.
What are you looking for to give you that confirmation that, hey, I really think this one's going to hit its target?
All right, so we'd have to go to the weekly chart for that. So let's close that down and go to the weekly chart. So if you waited too long on this, like just say you waited for it to get above this high of $1.92, you're not going to get much profit from there if you're looking to take profits or to, you know, for that forecast around that $2.35. So I'd probably be looking for confirmation, say around these highs, around that $1.30. But you'd want to see certain patterns without going too deep into it. I'd want to see a little bit of a retest of that low as well.
Let me ask you, Janine, is that too early for you?
Mate, I disagree.
Yeah.
Sorry.
I knew she was. I was just
Here
waiting.
we go.
Disagree. I'm going to come right in there and say no. All right. Only because I like to.
Yep.
And you can see that high there. I guess you were talking about you want it to get above certain points first, and you mentioned, was it this bar here?
That bar, yeah.
Yeah. So, like, you know, to me, it could just as easily turn around and hit that and come back down again. That's the real risk with it. But do I agree with their target? Well, you know, perhaps we should be talking about whether we actually have a different target, because looking at the unfolding and the pattern that we've seen on the downside here, if it does take out this recent low to the downside, I say it's all over, let it go. But this is sort of like a last ditch effort for this stock, the way I look at it.
Yes.
If it gets above that line again, I think that, you know, we've got some real opportunity even beyond what they're talking about. If it does take off, you know, that's probably a stretch target for now. But to me, if it starts that trend and it's off and running and then it gets through this high here as well, I don't see that as conservative waiting for that, given the potential that could come after that.
Right,
All right,
okay.
so we've got one more than the broker. All right, next.
Okay, so next we have Megaport. So on your screen again, monthly on the left, the consensus is buy. So,
Geez, wasn't this a talked about stock? I mean,
It
it's always
was.
been talked about in different circles,
Hasn't
and
it?
people are, you
Yep.
know, putting the money in this. But you know, you've got a forecast there for it. Do you agree with that?
no, at this stage, let's have a look. So $15.38. It looks like they've just put the forecast at that last high, basically. But look at this bar. Again, going back to what we were saying before with the closes, it looks like it's closing low, and it is closer to that last support level back in January. So if it does trade below it, and I think it's just traded, that's $8.47, and that is $8.51. So it hasn't dropped below it, but if it does drop below and close, we could be looking down at these kind of levels, say $4.70.
But I mean, this stock did report obviously, and had the week significant fall. Before that, if you take away that week, the stock looked like it was in a nice uptrend, and it still kind of looks that way. I mean, my question is this the final flush out, if you will, and potential opportunity to run back up, or are you thinking, hey, stay away?
I don't really care, to tell you the truth, because I'm not going to preempt it at this point because it's going down. So just looking at the chart there, horizontal line, like Pedro's saying, underneath all of that, possibly, but I mean, do we even have an angle of the trend there?
Do we
really
even have a trend?
We don't have anything that we can use. It's trading below a really significant level in my book, and our students will know what that is. So, until it gets back above sort of $10 to $12, there's some resistance there. I would say that, it's got to get above this high here, this August high, and 2023 high. Look
at what it's done back in 2022. So it had a very similar down bar there, traded sideways for a bit, and then just traded strongly down. So you don't want to get caught up in those moves. This is very similar, but a little bit smaller. You don't want to get caught up in that down move. So you want to see it find support around that low of $3.80, $4. Just see what it does around those levels.
Well, I did agree with you on something.
Very good. Okay, I've got 1 point.
There you go. Well, we've got 5 stocks, one kind of agreement. We do have room for one more quickly.
All right, yes.
Awesome. Okay.
Let's do it.
Isn't that lucky that you put in the extra one?
All
right.
We've got to be quick with
this one's got a strong buy. Okay, 12-month target, 197. Let's open up the monthly chart, have a look at whether we think it can get there. I think it actually could. There's a possibility it could. If it goes above the last month's high, then there's a real chance for that. It looks like we've got a really strong trend line down here across there. So, it could just come back up, hit that trend line. I'd be watching that like a hawk. But if it gets through that, gets above this high on the left in October 2021, I think then it's got some potential. But until then, but it's above $1. So
there you go. And I wish that I could get you back and disagree, but I have to agree, Janine.
All right. Well, thank you very much for that, Janine and Pedro. Now, stay with us as we'll be right back after this short break.
This week on Talking Wealth, discover how to reset your health and elevate your life with Shanna Kennedy and Colin Callender.
Health really is the foundation, isn't it? The concrete slab we want to build the house on. The more we do for ourselves, the more we work on ourselves, the better we show up for everyone else.
Michael Sy is in the studio to discuss how you can become an expert in just 6 months by upgrading your learning system.
There's been awesome findings within the last 10, 15 years in the areas of cognitive science and behavioral psychology that has really opened up a lot of clues as to how learning actually works.
Dale, Pedro and I jump in the studio to demystify ETFs.
When I'm looking at ETFs where they want to buy 200 stocks, I go, why the hell would you want to do that when you can just buy materials and financials and you got 60% of the market? You don't need to be Einstein to actually do better than an ETF. Get your free 7-day trial now to watch this and more.
Only on Talking Wealth. That amazing content you just saw is going live this Thursday on Talking Wealth. And moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 9290 9988. That's 03 9290 9988. Or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Praveen is asking about the price trajectory of Appen. This company is still not making a positive net income, yet it's been steeply rising, similar to Zip Company Limited. Now, my question is, what are the drivers behind such price rises, and are they more a play for short-term day traders, or are they backed by long-term value and growth investors? All right, Janine, I'll go to you on this one. one of Dale's favourites?
I'm sure they're backed by a lot of people hoping. That's all I can say.
But it's interesting because Zip was in a similar scenario back during that COVID time, and I've covered that stock before. That stock wasn't making money for a very long time, but the price ripped, really, really strongly. So, do you play the speculation or do you stay away until the fundamentals line up?
I think you stay away until the chart and the fundamentals both are lining up in this case. Given that it's highly speculative, as you were saying, in the case of Appen, because you actually mentioned, Praveen, you actually mentioned the other stock. What was the other one?
Zip.
Zip. We actually were very cheeky, right? As I said, while the cat's away, the mice will play. So we're only supposed to talk about one stock, but I actually overlaid the other one over the top of it. And we thought when we were looking at this, very similar price action there. You can see there that they've both come, as Phil was saying, they were both going down for quite some time. And we've seen Zip take off. Appen's only just started to take off, testing that bottom. Similar sort of move, bit of consolidation before it takes off, and then rise up consolidation and it takes off. So look, I mean, it's a positive that we've seen this rise, and now we just need to see a retest, a pullback, and then another move up, and that to me would be the true test of where it's going. What about you, Pedro?
Yeah, definitely. So you can see on this final bar here, it's pointing down. So it actually looks like it could be trading down. This is where you have to be very careful to get in, because you could start thinking that it's starting to move up, only for it to just take you down again. Although if we did see a retest maybe of that 80 cent level, if we retest that and then we see price coming up back above this high of $1.50, I reckon that it could be a nice little trade there.
Look, can you just make sure that it doesn't go back below $1 for me?
Yeah, all right. If it stays above $1,
then I like it.
All right, great advice, guys. Well, we now have a text from Samit, who is asking about KGN. Hi all, I'm looking to buy short to medium term, not in it, but interested to know if there is a potential another uptrend. Thank you, Samit. Pedro.
All right, Kogan. So this one was another market darling way back when. So let's have a look at the chart. Let's go straight into the weekly to see what's going on. It's just trading sideways really. So we want to see price really start to trend up, and to be conservative, get above that $8 level again. It's not giving me any reason now to think that it is starting that, especially since it looks like it has traded below that low, which seems significant for this stock. If we have a look at this other bar here, so that low of around $4, it's found support a fair few times around there, and even resistance. So that level, it is finding support around there. It's gapped up. It could just be a bit of an overreaction. I'd like to see a little bit more from this stock before we start to reconfirm that trend. I
agree with you. I'd like to see a lot more from it, actually. Even getting above this point, potentially, which is that high of 555 in December 2023. Just let it play around, because they will manipulate it right now.
All right, well, there you have it, Samit. Maybe not yet for Kogan, for the team there. Anyway, our next email is from Natasha, who writes, could you please analyse Xero to see if it's a buy at this stage? All right, Janine, Xero.
All right, well, look, I think we talked about it last week. We've been talking about this every week?
Yeah, pretty much.
All right, then I feel like I'm having a deja vu moment, Natasha. But thank you for bringing this stock up. But look, at the moment this week, it's actually down, and I actually did expect this to happen, given that it made a quick turnaround after this low here, gave an exit signal, and then a quick flash in the pan. It turned around and took out that high. But look, now it's actually retesting that, so I'd just leave it and let it unfold. Let's just see how far it goes to the downside, and then wait for another move back up through that high. I'd let it go for now.
Yeah, I would also agree and let it go. I do like the trend that it's forming. It reminds me of realestate.com, much like those moves that it made, and it ended up trading higher than that high. So what we want to see is price trading above that $156 level. Now, you may think that's very expensive for a stock, but it's all relative, really.
Well, I was going to ask that question, because waiting for 156, then you've really got to ask yourself, is the risk worth the reward?
Exactly. Yep, that's a very good point.
I probably wouldn't wait for that point.
Yeah,
I'd just be checking to see what sort of upside we've got in here. So like, you know, if we're looking at something here and we're trying to get up to, you're saying 156.
It's very close.
There's about 8% in it to there, but I'd want to know what there's obviously going to be some important levels that we work out through our analysis above that at these levels overhead. Now, if you can justify the trade from the upside and the risk is not significant, if we get a short-term low, we might only be risking a small amount to get a decent return. You've just got to weigh it up, don't you?
And
Exactly.
I mean, in terms of the play, right now, the way the stock is, obviously it's getting close or approaching that all-time high. Is it a short, medium, long-term play?
Look, some stocks, it could be a short-term play, it could be medium-term, but look, not all stocks will turn and start and really take off to the downside after breaking new all-time highs. It's not just a given that they will. So you've got to do your research and have a look and see what it's done in the past.
All right, we now have a text from Florian who is asking about JLG. Hi everyone, I bought JLG at $6.01 in mid-July. My stop loss was under the June low at $4.94. Now, after they released the report, the stock fell below my stop loss before I could sell. What advice do you have for me regarding this? Thank you, Florian. All right, Pedro.
All right, Florian. Let's just get straight into the chart to really have a look at what's happened here. We're on the monthly chart, so $6.01, I believe the entry was.
That's the entry, yes.
And look at that. It's just, you know, this sometimes happens. You couldn't have really predicted this. And it's really about drawing that line in the sand. So that line that I've drawn there, that's the entry. So we could just could have just put a line in the sand. And you did say that it triggered your exit. So well done for exiting, first of all, and not waiting for it to get back up.
Well, it went through his exit because of
So he didn't take
so
it.
he hasn't taken
so he
it.
hasn't taken
And what
it.
would have been nice to know is when he got in at that 601, because the stock's going sideways. It's been for a while. So that
I've
in
got
itself,
something to talk about in relation to that as well.
Well, please
after
do.
Pedro's
Yeah, sure.
finished. Yeah.
Yeah.
Keep going.
Well, what I was saying is that it would have been nice to draw a line in the sand back at that level that I highlighted, say around that $5 level. But it has traded strongly now to the downside. So if you're still in, whether you'd be selling out now, that's really up to Florian.
well, what would you do if you've missed your stop loss now? Is it a case of get out and take your lickings, or because I mean it could go lower, and then what do you do?
Exactly. So let's have a look at exactly how much he'd be down right now. So you're down like 30%.
You've always got to draw the line in the sand and know when you're getting out, even if you decide to just stay in there. But I think it's worth having a look at that weekly chart, just so we can help out a bit. First of all, if okay, what might it do? Let's go to the daily chart, even shorter term, to have a look. It's gapped down, but it's closing back up. It didn't close high on the daily bar. If it had closed right back up high on the daily bar, I'd be a little bit more confident about it. But if it was me, given how it's fallen, I'd probably just wait for a few days just to see what it does, and you may end up having to find a new strategy on how to manage the risk to the downside. But if it is that you don't want to risk any more than X amount, draw the line in the sand and say that's it. If it closes back below that level, I'm out, whatever that is for you. But I just wanted to help you out by showing you something else and identifying this chart. Now, back here we had a low in June 2022. The stock went up for maybe 8 days, 10 days, and most of the time it just spent sideways making lower lows. Okay, lower highs. It didn't go higher. To me, that was a real risk sign. And then it got sold off here in June 2023. So that was around halfway through the year. You'd have to go back and have a look at why. But it's always good to go back in history and learn from these situations. Now here, it was actually trading up, looked better, but still is not getting above these other highs here, which is still a bit of a concern. And once it took out these lows in October 2023, I think it was history. So it really, on a week by week basis, he could have been, or she could have been out earlier.
I agree. I'd just be holding on and just seeing what happens now because of that gap.
All right, well there you have it, Florian. Thank you very much for your test. Now, if you enjoy watching and want to see loads more of our content, click subscribe now. Next we have Ben, who writes, could you please provide your thoughts on JHX? I appreciate this is historically a volatile stock, but I like the way it's been tracking. It's bounced back strong since the July low and looks to be trending nicely. However, after reading Dale's book, I am concerned that this doesn't fit the character of my beginner or risk-adverse portfolio, which is mainly composed of the top 20 stocks. Now, Janine, I'll go to you on this one. It's fantastic that he's identified where he sits in the risk category.
I think that's awesome, and well done, and for saying that you're in the top 20 shares. But you know, sometimes you just can't help yourself, can you? I know. So let's just go and have a look at James Hardie, shall we? You can see there on the chart that we've marked this July low for you. Now it's funny because when Pedro and I were talking about this stock, and please don't take this the wrong way, but we had a bit of a chuckle about it because when I was looking at the chart, first of all, I thought it was the major low down here. I'm just going to show you now. I thought that was the low you were talking about, but I don't really think that it's really tested anything or settled down. It's just way too early to tell at this point in time. The fact is that it's been pushing down, which is really good. Sometimes you can get these pullbacks and it gives you another opportunity to get into the stock, but it's all gappy. It looks messy. I'm not really excited about it at all at this point.
Pedro?
Yeah, me either. It is very gappy. And now let's expand out that weekly chart. And if you've read, having read Dale's book, you would know about the trend or the momentum lines. And really, it's fallen below that momentum line there. So it's just it's bounced around that line. It's traded below. It traded back up. It did find some support around there. And now it looks like it's hitting its head on that momentum line there. So the trend has not been reconfirmed as of yet. It's a real risk that it could actually trade back down to these levels.
I mean, is he right in terms of it being such a stock that doesn't fit that risk profile? Because I mean, at the end of the day, it is a top 50 James Hardie.
It's a big stock. So I mean, he's right in sort of saying, well, if he's with top 20, then you don't go outside of that. You've got to be disciplined and stay in that. But if you've got a portfolio where maybe one or two stocks could be outside of it, I think there's nothing wrong with having a James Hardie because it's a big liquid stock. He's not being crazy and going for little penny stocks.
Yeah.
So it's not a silly thing.
Yeah, I totally agree. Now we do have a text from Jack who says, I wanted to buy ALL at $47, but CommSec claimed I had insufficient funds. Not sure why. I didn't end up buying it, and now ALL is at $54. What should I do? Thanks, Jack. All right, Pedro. I mean, it's tough when the money's not in the account, isn't it?
That's right. Well, CommSec, so that would mean that the money would have to be in the CDIA account. Now, this is, I'm not sure what the situation was there. You'd have to probably have a look into that yourself and contact CommSec.
Well, ring your employer and say, hey, you didn't pay me for the week.
That could
what
be
are you
another,
doing? You owe me.
Did he transfer it to the wrong account?
Yeah, definitely. Well, it's not going to get filled if the money isn't in that account.
I mean, CommSec have automated systems. It's not like they're going to say, oh, we picked it from the wrong account.
Yeah, well...
But I mean, the more important, sorry to cut you off, the more important point is that, now the stocks run up, and this is an all too common thing that happens with trading, in that you've missed the opportunity. Now it's gone in your direction where you think it's going. Is it too late to get in, or do you jump in?
Yeah, that's a good point.
Well, let's have a look at the chart and take a look. All right, so let's go back to the weekly chart. So it's that trading at that 54 level. We'll go to that price range percentage. So $45. Now it's traded up 20%. Of course, I mean, when this happens, you're really kicking yourself if you haven't taken your trade, especially if you've got your rules.
Do you get the tissues out?
You do, definitely. And sometimes it can actually even hurt more than when you're losing. So,
but I mean, $40 to $50, that's weeks for that to happen. You've had opportunity to...
Yeah, definitely. I'm not sure not sure what's happened there. So, unfortunately, at this stage, it looks like it's about to retest that high again. It does look like it's trading up. So you could take a certain entry. I do see a potential entry there. But then you've got blue sky. So basically, you just have to run with it. And
let's talk about one scenario. If, for example, you put the trade on and you thought you were going to get filled, you didn't get filled, and you didn't look at it for 2 months. That's a scenario that could happen, isn't it? But there's a lesson, isn't it?
Exactly. The lesson is you need to consistently be looking at your platform and your account and your stocks. Monitoring that daily, weekly, monthly, however you do. But make sure you do monitor it because if this situation does happen, you're more than likely going to be kicking yourself. But we do now have a text from Les who says, "I'm currently in a stock on the New York Stock Exchange, not ASX, sorry, which is currently moving beyond its all-time high. Now, I am curious, what are the key things to look for to indicate a reversal when the stock is above its all-time high. Thanks, Les. All right, Jeanette.
Les.
Yes,
Les,
$1 million
good one.
question.
Oh, look, where do I start? When it's above its all-time high, if it's going to reverse, is there a fear here that, I've got a profit and, the stock's going to reverse and it's going to take it all away from me again? Is that where it's coming from?
Look, potentially, but to me, the more important thing is, if you could just find it on a whim, that answer, it's not that easy. You need to do the work.
Yeah, you need to do the analysis. But look, often there can be reversals that happen. There can be trend lines in place where it could come back below a trend line. But there needs to be confirmation that there's been a turn. Sometimes it can turn temporarily and then shoot up again. Blue sky is a beautiful thing, isn't it? Once the stock gets in
Even
that.
just drawing a trend line underneath it or something simple like that could help.
But it's not only one thing, because at the end of the day, reversals don't all happen in the same way using the same set of rules. The market does generally move to the same ebbs and flows, but each individual scenario is different. So, we're using all different sets of tools for that particular occasion, which is so important that you do have a number of tools to identify. But look, great question in terms of trying to identify those reversals. Perhaps buying Dale's book would be a start, or getting the book. I know these days.
Even if he writes in about a particular example with a stock, and we could talk about the stock, would be helpful.
That's a great idea. All right, now, before we let you go, what was your favourite part of the show? Was it our hot stock tip, our topic for the night, or was it a viewer question? Let us know by commenting below, and thank you to all of those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next week in our main topic, we get into the ASX company results post-reporting season and identify some game-changing opportunities. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. If you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week, bringing it to you. If you are subscribed, then you will always know when we go live and put up new content. As always, thank you for joining us for now. Goodbye, good luck, and good trading.